You've been watching the market for 3 hours. Nothing's happening. No clear setups, no obvious opportunities. The charts are just moving sideways, grinding, doing nothing interesting. You feel restless, anxious. Your trading strategy says wait for your setups, but waiting feels unbearable. Your fingers tap on the desk. You switch between time frames looking for something, anything that might justify a trade. Then you see it, a marginal setup. It doesn't quite meet your criteria. The risk-reward isn't ideal. The confirmation isn't there, but it's something. It's action. It's better than sitting here doing nothing. You take the trade, not because it's a good trade, because you're bored and you need something to do. 30 minutes later, you're stopped out. You lost money on a trade you knew wasn't good when you took it. And this isn't the first time. This is a pattern. When the market is slow and you're bored, you trade. When you trade from boredom, you lose. But you keep doing it anyway because the discomfort of doing nothing feels worse than the pain of losing money. Until you understand why boredom drives you to overtrade and how to manage it, you'll keep sabotaging your account during slow market conditions. The problem isn't the market. The problem is your relationship with boredom.
The psychology of boredom-driven overtrading. Here's what's actually happening in your brain when boredom causes you to overtrade, and why it feels so compelling to take bad trades rather than do nothing. Humans have a fundamental need for stimulation. Your brain craves novelty, action, engagement. When you're understimulated, when nothing interesting is happening, your brain experiences this as a form of psychological discomfort. Neuroscience research shows that boredom activates similar neural pathways as physical discomfort and mild pain. Trading is inherently exciting. When you place a trade, your brain releases dopamine, the neurotransmitter associated with anticipation and reward. Your heart rate increases, your attention focuses intensely, you feel engaged, alive, purposeful. Trading provides powerful psychological stimulation. The problem is that good trading opportunities don't appear on your schedule. The market doesn't care that you're bored. High-probability setups that meet your criteria might appear several times a day, or they might not appear for several days. Your brain's need for stimulation is constant, but trading opportunities are sporadic. This creates a dangerous mismatch in your trading psychology. Your brain wants stimulation now. The market will provide opportunities when it provides them, not when you want them. When this mismatch becomes uncomfortable enough, your brain will find ways to create stimulation even when genuine trading opportunities don't exist. This is where overtrading from boredom originates. You're not taking trades because they meet your criteria. You're taking trades because taking trades relieves the psychological discomfort of boredom. You're using trading as a stimulation delivery mechanism rather than as a strategic wealth-building activity.
The 4 types of boredom that drive overtrading. Boredom isn't a single experience. Psychological research identifies different types of boredom, and each type drives overtrading in distinct ways. Type 1, indifferent boredom, the calm before the storm. This is the early stage. The market is slow, you're not particularly anxious yet, you're just unstimulated. Your attention wanders. You check social media, read news, look at other markets. The internal dialogue, nothing's happening. The market is dead today. Maybe I should look at different time frames. Maybe there's something I'm missing. This type of boredom is deceptive because it feels benign. You're not panicked, you're not making obviously bad decisions, but you're starting to lower your standards, looking for justifications to trade where none exist. The seeds of overtrading are being planted. Type 2, reactant boredom, the restless urge. This is when boredom becomes uncomfortable. You've been waiting for hours. You feel increasingly restless, agitated. Your need for stimulation is becoming urgent. You start feeling like you're wasting time just watching without acting. The internal dialogue: I've been sitting here for 3 hours. I should be trading. That's what traders do. I'm not going to make money just watching. I need to find opportunities. I need to do something. This type of boredom drives you to force opportunities that don't exist. You start convincing yourself that marginal setups are actually good enough. Your standards deteriorate because doing something feels psychologically necessary. Type 3. Searching boredom. The desperate hunt. This is when boredom becomes desperate. You're actively searching for any reason to trade. You switch between instruments frantically. You zoom in to smaller time frames looking for patterns. You check every chart in your watch list multiple times. The internal dialogue: there has to be something tradable somewhere. Let me check the 5-minute chart. Let me look at this other stock. What about this currency pair? Something has to be setting up. This type of boredom causes the most obvious overtrading. You're no longer even pretending to follow your strategy. You're hunting for action regardless of quality. This is when your worst trades happen. Type 4. Apathetic boredom. The dangerous numbness. This is the most dangerous type. You've been bored for so long that you stop caring about your rules, your strategy, your risk management. Nothing matters except escaping the numbness. The internal dialogue: I don't even care anymore. Just take something, anything. Who cares if it meets the criteria? Just trade. This type of boredom leads to completely reckless behavior. You take random trades with no analysis, violate position sizing rules dramatically, and ignore stops. This is when traders destroy accounts in single sessions.
Meet Yale, the trader who couldn't sit still. Yale had been trading for 4 years when he finally confronted his boredom-driven overtrading problem. He had a solid trading strategy with proven edge. His best trades, the ones that fully met his criteria, had a win rate of 68% with excellent risk-reward ratios. But Yale's overall trading results were mediocre. His annual return was barely 7% despite his strategy's back-tested potential of 32%. The discrepancy was massive, and Yale couldn't understand why. Then he did something that changed everything. He categorized every trade in his journal into 2 groups: criteria trades that fully met his strategy requirements and other trades that didn't. The results were shocking. Criteria trades: 68% win rate, average risk reward of 2.7 to 1, highly profitable overall. Other trades: 37% win rate, average risk reward of 1.2 to 1, consistent losers overall. Yale had taken 147 trades over the past 6 months. 53 were criteria trades, 94 were other trades. He was taking nearly twice as many bad trades as good trades. When Yale analyzed when these other trades occurred, he found a clear pattern. They almost exclusively happened during periods of low market volatility, sideways price action, and extended periods without criteria trades appearing. They happened when he was bored. His boredom-driven overtrading was systematically destroying his edge. His good trades were highly profitable, but his boredom trades were giving back all those profits and more. Yale was essentially working hard to make money with disciplined trading, then giving it all back by trading out of boredom.
Inside Yale's mind, the boredom trading spiral. Yale decided to document his internal dialogue during a typical boredom-driven overtrading session to understand the exact psychological progression. Hour 1, the waiting phase. Tuesday morning, 9:30 a.m. Yale completed his morning market analysis. His watch list was set. His strategy criteria were clear. He was ready to trade. By 11 a.m., no setups had appeared. The market was choppy, directionless, low volume. Yale's internal dialogue was still rational. No clear setups yet. That's normal. My strategy doesn't require trading every day. Patience is part of the edge. I'll wait for quality opportunities. Yale felt fine, calm, professional. This was good trading psychology at work. Hour 2, the restlessness begins. By 12:30 p.m., Yale had been watching screens for 3 hours. Still no clear setups. The market continued grinding sideways. Yale's internal dialogue started shifting. This is a slow day. Nothing's happening. Maybe I'm being too selective. Let me review my criteria. Maybe I'm missing opportunities by being too strict. Yale started reviewing old trades where he'd passed on setups that later worked. His brain was selectively retrieving memories of opportunities missed, ignoring all the times his selectivity protected him from losses. See, this setup from last week, I passed on it because the volume wasn't perfect. It would have worked. Maybe I don't need perfect volume confirmation every time. Yale's standards were starting to erode. He wasn't consciously aware of it yet, but boredom was beginning to distort his judgment. Hour 3, the active hunting. By 2 p.m., Yale was actively uncomfortable. He'd been at his desk for nearly 5 hours with no trades. His rational brain knew this was acceptable. His emotional brain was screaming for stimulation. Okay, this is ridiculous. I'm a trader. I need to trade. Let me check different time frames. Maybe there's something on the 15-minute chart. What about the 5-minute? There has to be something. Yale switched from his primary 1-hour time frame to shorter time frames looking for patterns. This was a red flag. He was changing his trading approach not based on strategy, but based on his need for action. On the 5-minute chart, he found a pattern. It looked like a potential breakout. It didn't meet his normal criteria because he didn't trade 5-minute setups. His strategy was specifically built for 1-hour time frames, but it was something. This looks interesting. It's not my usual time frame, but a breakout is a breakout. The logic is the same, just compressed. I can take this. It's better than doing nothing all day. Hour 4, the rationalization and entry. By 2:30 p.m., Yale had been analyzing the 5-minute setup for 20 minutes, building a case for taking it. His internal dialogue was a masterclass in rationalization. This actually meets most of my criteria if I adjust for time frame. The structure is there. The volume is decent for a 5-minute chart. The risk-reward is okay. Not great, but okay. And let's be honest, I've been sitting here all day. I need to justify my time. I need to be productive. Taking one reasonable trade isn't overtrading. It's being flexible and adaptive. His rational brain tried one last intervention. This doesn't meet your trading criteria. You don't trade 5-minute time frames. You know this is boredom driving this decision, not analysis. But his emotional brain overwhelmed it. You're overthinking this. You'll regret not taking it when it works without you. Take the trade. Do something. Stop wasting the entire day watching. Yale entered the trade. The moment he clicked, he felt relief, not from confidence about the trade, but from escaping the discomfort of inaction. He had stimulation again. His brain was engaged. The boredom was gone. The aftermath. The trade stopped out 23 minutes later. Yale lost $160 on a setup that never met his criteria in the first place. Sitting there after the loss, Yale felt a familiar combination of frustration and self-recrimination. He knew before entering that this was a boredom trade. He knew it didn't meet his standards, but the discomfort of doing nothing had been so overwhelming that losing money felt preferable to continued inaction. This realization was both clarifying and disturbing. Yale wasn't choosing to overtrade. He was escaping psychological discomfort. His overtrading problem wasn't about discipline or knowledge. It was about his inability to tolerate boredom without taking action. The anatomy of boredom-driven trading destruction. Yale analyzed his pattern and identified exactly how boredom-driven overtrading destroyed his trading performance. Destruction pattern 1. Edge dilution. Yale's actual trading strategy had genuine edge. When he followed it, he made money consistently. But his boredom trades had negative expectancy. Every boredom trade diluted his overall results. The mathematics were brutal. If Yale took 5 criteria trades that made him $2,000, then took 8 boredom trades that lost him $1,700, his net was only $300, despite executing his real strategy perfectly. His boredom trades were systematically canceling out his edge. Destruction pattern 2, opportunity cost. Every dollar Yale lost on boredom trades was capital that wasn't available for real opportunities. His account was smaller because of boredom losses, which meant his position sizes on good trades were smaller, which meant his profits on good trades were reduced. Over 6 months, Yale had lost $4,300 on boredom trades. If that capital had been preserved and deployed on his criteria trades instead, his returns would have been dramatically higher. Destruction pattern 3, psychological pattern reinforcement. The worst damage was psychological. Every time Yale traded from boredom, he reinforced the pattern that trading was the solution to uncomfortable feelings. He was training his brain that when bored, trade; when unstimulated, trade; when restless, trade. This conditioning made the behavior progressively harder to control. His brain learned boredom, trade, relief. This cycle was being etched deeper into his trading psychology with every boredom-driven trade. Destruction pattern 4, standards erosion. Each time Yale took a boredom trade, he proved to himself that his strategy criteria were negotiable. His standards became suggestions rather than rules. If he could take trades that didn't meet his criteria and rationalize them as reasonable, then his criteria weren't actually governing his behavior. This erosion made it progressively easier to violate his strategy. The first boredom trade required significant rationalization. By the 20th, he barely needed to justify it. His standards had deteriorated to the point where almost anything looked tradable when he was bored. Destruction pattern 5, time inefficiency. Yale would spend entire days at his screen, overtrading from boredom, and end the day with losses. If he had simply accepted that no good opportunities existed that day and done something else with his time, he would have preserved capital and gained back 6 to 8 hours of his life. Boredom-driven overtrading was making trading both unprofitable and time inefficient. Yale was trading more, working harder, and making less money. Yale's transformation, building boredom resistance. Everything changed when Yale stopped trying to control his overtrading through discipline and started building systems that addressed the root cause, his inability to tolerate boredom. System 1. Opportunity quantification. Yale's first change was creating realistic expectations. He analyzed his strategy and calculated how many high-quality setups actually appeared per week based on historical data. The answer, between 3 and 7, depending on market conditions. Yale created a visual expectation chart. Before every trading week, he wrote, "Expected quality setups this week, 3 to 7." This simple statement recalibrated his expectations. He stopped expecting constant action and started expecting sporadic opportunities. When he'd been watching screens for hours with no trades, instead of feeling like he was failing, he would look at his expectation chart and think, "I'm expecting 3 to 7 good trades this week. It's only Tuesday, no problem." This realistic expectation dramatically reduced his boredom-driven pressure to trade. System 2. The boredom break protocol. Yale implemented a simple rule. If he felt bored or restless while trading, he had to physically leave his trading space for a minimum of 15 minutes. No checking charts on his phone. Complete disconnection. During these breaks, Yale would walk, read, do household tasks, anything that provided different stimulation. The key was that the break had to be genuinely different activity, not just checking different markets or time frames. When he returned, his boredom usually had passed. More importantly, any marginal setup he'd been rationalizing usually looked obviously wrong after the break. The physical disconnection interrupted his rationalization process. System 3. Alternative engagement activities. Yale realized he needed constructive activities to do during slow market periods instead of forcing trades. He created a specific list of trading-adjacent activities that provided engagement without requiring him to place trades. Reviewing and updating his trading journal with detailed analysis of past trades. Backtesting variations of his strategy to refine his edge. Creating educational content about his trading approach. Reading research papers on market psychology and behavioral finance. Analyzing different markets or timeframes for future trading opportunities. When Yale felt bored, instead of lowering his standards to find a trade, he would select an activity from this list. This provided engagement and stimulation while actually improving his trading rather than destroying it. System 4. Maximum trade limits. Yale implemented a hard daily trade limit based on his realistic opportunity analysis. Maximum 4 trades per day, regardless of how many setups he thought he saw. This limit prevented boredom-driven overtrading at the systematic level. Even if Yale's discipline failed and he started rationalizing marginal trades, the platform enforced the limit. After 4 trades, he was done for the day, whether he wanted to continue or not. This external constraint protected him from his internal impulse to overtrade. System 5. Boredom identification training. Yale started practicing a specific form of awareness. Several times during each trading session, he would pause and ask himself, "Am I feeling bored right now? Am I looking at this setup because it's actually good or because I need something to do?" This simple check-in dramatically increased his awareness of when boredom was driving his decisions versus when genuine opportunity was present. Awareness didn't eliminate the boredom, but it prevented him from acting on it unconsciously. System 6. Time-boxing trading sessions. Yale realized that keeping markets open all day was creating extended periods of potential boredom. He implemented a time-boxing strategy. He would actively trade for the first 90 minutes of the market session and the last 90 minutes. During these windows, he was fully engaged, focused, looking for opportunities. Outside these windows, he closed his charts and did other work. This structure eliminated the endless waiting that created boredom and prevented the 5 to 8 hour sessions where overtrading inevitably occurred. The breakthrough insight. 6 months into his transformation, Yale was watching the market during a particularly slow day. He felt boredom emerging. His restlessness increased. He started looking at marginal setups. Then he had a profound realization. This boredom I'm feeling, this is actually proof I'm doing trading correctly. If I was overtrading bad setups, I wouldn't be bored because I'd constantly have action. The fact that I'm bored means I'm being appropriately selective. Boredom is the price of selectivity. Boredom is the cost of having real edge. This reframe changed everything in Yale's trading psychology. Boredom wasn't a problem to solve through trading. Boredom was evidence he was doing his job correctly. The most selective, most profitable traders experience the most boredom because they take the fewest trades. Yale started viewing boredom as a positive signal. When he felt bored during trading, instead of thinking, "I need to do something," he started thinking, "Good, this means I'm maintaining my standards." Yale's results. The transformation in numbers. The changes in Yale's trading results after implementing his boredom management systems were remarkable. Before systems, Yale took an average of 11.3 trades per week. Only 36% of these met his actual strategy criteria. Win rate on all trades, 48%.
Annual return, 7%. After systems, Yale took an average of 4.8 trades per week. 89% of these met his strategy criteria. Win rate on criteria trades, 67%. Annual return over the next 14 months, 27%. He was trading less than half as much and making nearly 4 times the returns. The difference was entirely in eliminating boredom-driven overtrading. More importantly, Yale's psychological experience of trading transformed. He stopped feeling like he had to trade constantly to be a trader. He accepted that patient waiting was more important than constant action. Trading became sustainable and enjoyable rather than exhausting and frustrating. How to control your boredom-driven overtrading. Your action plan. If you recognize this pattern in your trading, here's your systematic approach. Step 1. Quantify your real opportunities. Analyze your strategy and calculate realistically how many quality setups appear per day or week. Write this number down prominently. This creates appropriate expectations and reduces the pressure to trade constantly. Step 2. Categorize your past trades. Review your last 100 trades. Categorize each as either meeting your full criteria or not. Calculate the performance difference between these two categories. Make the damage of boredom trading concrete and visible. Step 3. Implement the boredom break rule. Create a mandatory rule. When you feel bored or restless, you must leave your trading space for 15 minutes minimum. No exceptions. This physical break interrupts the boredom to overtrading cycle. Step 4. Build your alternative activity list. Create a specific list of trading-adjacent activities you can do during slow periods. Make this list visible near your trading space. When bored, select an activity from the list instead of forcing a trade. Step 5. Set hard trade limits. Based on your realistic opportunity analysis, implement maximum daily or weekly trade limits. Use platform settings or external accountability to enforce these limits, regardless of how you feel. Step 6. Practice boredom awareness. Set random alerts during your trading session. When the alert sounds, check in with yourself. Am I feeling bored right now? Is boredom influencing my current analysis? Build awareness of when boredom is driving your decisions. Step 7. Time box your trading. Instead of watching markets all day, define specific time windows for active trading. Outside those windows, close your charts. This eliminates extended boredom exposure that leads to overtrading. And step 8. Reframe boredom as positive. Practice this thought. Boredom while trading means I'm maintaining high standards. Boredom is evidence of selectivity. Boredom is the price of edge. Transform boredom from a problem into a positive signal. The fundamental truth about boredom and trading. Here's what Yale ultimately learned. Boredom is not a trading problem. It's a human problem that appears in a trading context. Your inability to tolerate boredom without taking action is destroying your trading results. The best traders are comfortable being bored. They understand that quality opportunities are rare. They know that patient waiting is more valuable than constant activity. They've learned that boredom is simply the feeling of not having immediate stimulation, and that feeling is completely acceptable and doesn't require any action. Your edge in trading comes from selectivity. Selectivity requires waiting. Waiting creates boredom. Therefore, your ability to tolerate boredom directly determines your profitability. The more comfortable you are being bored, the more selective you can be. The more selective you are, the better your results. You don't need to eliminate boredom. You need to accept it without acting on it. You don't need constant action. You need patience. You don't need to trade every day. You need to trade only when genuine opportunities align with your strategy. Stop trying to solve boredom through trading. Start accepting boredom as part of the job. Build systems that protect you from your impulse to trade when bored. That's how you control boredom-driven overtrading. That's how you preserve your edge. That's how consistent profitability becomes possible. Your discomfort with doing nothing is costing you thousands of dollars. Learn to do nothing without discomfort, and your trading results will transform.